the Forex market differ from other markets?
Well, it differs in the main way is that it's not exchange-based. So you have many Forex traders or houses or people who are providing two-way prices on different currency pairs. And they might be trading for their own book. They might be they will be trading for their own book, because if they're offering a price out there, they're prepared to let someone buy it off them and prepared to let someone sell it to them. And so, but that is a very different thing from going onto an exchange where everyone is feeding in or putting in bids and offers into a single marketplace. Although exchanges are a bit more fragmented now, so it's a little bit different, but nevertheless, that is a difference. The other thing, of course, is that Forex markets, Forex it's a pair. So it's always one currency against the other. So it's not an absolute. It's not what's the value of gold, which is traded in dollars, or oil, which is traded in dollars, or the FTSE, which is an index. So, you've got one currency pitted against, but sort of weighted against another currency. So it's all a question of relative values. So you're thinking about what is it that is affecting, what is making one particular currency more attractive to people than another. Is it the fact that that country has a higher interest rate, or the prospect of higher interest rates? Or is there something to do with, how likely is their central bank likely to engage in quantitative easing? I mean, we're seeing the Japanese at the moment who, are sort of like topping the league in terms of sort of quantitative and qualitative easing. So, that in normal circumstances should see the yen weaken. Yet, funnily enough, it's not. So, there are an awful lot of things which play into this. Sentiment, forward projections, and so the outlook for those countries themselves.
How does Forex spread betting differ from conventional Forex spot trading?
I don't think it differs very much. I mean, I suppose one could say, well, look, if I was a Forex trader, if I was working for a bank as a Forex trader, I'm dealing with other banks, with other financial institutions who are making markets in specific currency pairs. But if I'm a spread better, then I'm going through a spread better provider who's doing exactly the same thing. I mean, the main difference between Forex and dealing on FTSE or gold or an individual stock or anything is that the FTSE, gold and individual stocks are all traded on exchanges. Forex isn't. Forex is a sort of a much more open market. So in other words, you have lots of different financial institutions submitting prices, quite often into some kind of trading hub, if you like. You could have access to maybe sort of 5 major banks contributing prices, or 20, and then sort of pulling out the best bids and offers from that. But that, to me, so that's, as far as I'm concerned, the big difference is between Forex and other markets, whether you're on exchange or off exchange. But in terms of spread betting versus someone who is a Forex trader, if he or she is dealing in big enough size, and they'd have to be dealing in very big size, they might be dealing directly with those banks. Otherwise, they're going through an intermediary, whether that be a Forex broker or a spread betting provider.